Welcome everybody. This is the Thursday evening Viper Trading webinar. If you are here to learn about trading futures markets using the Viper tools, you are absolutely in the correct spot. Tonight's topic is developing consistency and confidence, part 1. We touched on this towards the end of last Thursday's webinar, and everybody seemed to really like the topic, so we're going to devote two whole webinars to it. So stick around. I think everybody's going to like this one. It's going to be a good one. Okay. All right. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar or the webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. All right, I'm going to ask your patience to hold on. I'm going to take my sweater off here. It's getting a little toasty. Got the heater on. Stand by 1 second, please. Okay, I'm back. Okay, let's see. What screen are we on? Are we on ES yet? Let's get over to screen 1. Here we go. All right. Okay. All right. So before we dive right into the actual trade setups themselves, let's all kind of get on the same page in terms of what we're talking about. And let's start off with the definition of the words that are sort of key and critical to our webinar here tonight. Let's do it this way. Let's put consistency. Oops. Equals fill in the blank. And when we say when we're using these terms, of course, we're using them in the context of trading because they can mean lots of different things to lots of different situations, right? But here, in fact, let me put trading right at the top so everybody's on board with the fact that we are talking about our trading here on these terms right here, yes? Let's go back up here. So we're talking about trading. As strange as it may seem, some of us might have different sort of understandings of what these mean. So let's make sure we're all on the same page before we get too far down the road here. All right, so help me out here a little bit. What do these words mean to you, to everybody collectively here tonight? When we say the term in regards to your trading, we want to have consistency. What are we really talking about there? And of course, when you are able to achieve consistency, you are said to be building your confidence. So they are obviously tied together. Consistency and confidence kind of go hand in hand, right? So what does that mean to everybody in regards to your trading? Just type in your thoughts. We'll take a minute, get some feedback from the team here. Consistency and confidence in your trading. Okay, we got some answers coming in here. Winning trades with respect to your instrument is Lewis. CPT, consistently profitable trader, seeing trades. Bruce says more wins than losses. Repeatability, that's good, Manish. Consistent percent, this is Brian K. Having a consistent percentage of winners over the losers, and the winners are gaining larger than the losers. Good. Profitable every day. That's a good one, Mario. Kathy just typed in a bunch of dollar signs. I guess that means money, which is good. Steady increase to your equity curve. These are all great answers. Taking a trade setup without prejudice, according to Arnie. Confidence having the belief in the system and no fear of pulling the trigger. Good. 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 All right. Now that we all have an understanding of what these words mean in regards to our trading, let's talk about the next step. And that is how to achieve consistency. So first we define what we're trying to do, yes? And then next thing we're going to talk about how to do it. So if I was going to type into consistency and I go ahead and add a couple of words in front of it, like how do I achieve consistency? I being you, the trader, right? Let's go with that one first. How do we achieve consistency? Well, let's think about some things that affect consistency. Would you say your instrument that you trade? Would that have an impact on consistency? So let's go ahead and type that in. Okay, let's make that one of our first things. How do I achieve consistency? Well, you have to, let's put some bullet points under here. Pick the right instrument. Think that has something to do with it? Now, for those of you that are visiting, let me back up for a second here, because some of you might be just looking at this for the first time, and you might be glazing over and wondering what the heck are we talking about here. Let me just back up for a second, okay? So Viper Trading Systems has been around a little over 9 years. We're going on 10 years. Next year will actually be 10 years for us. And so Gary and I have been doing this together for a very long time. And we're connected to a data feed, so which is our broker, NinjaTrader. And so what you're looking at here is a chart. So we're exclusively on the NinjaTrader platform. And if you just had a plain chart up here, you would just see bars. Okay, they might have different colors. They might be red or green or something else, but there would be no form or structure to what you see. It would just be a bunch of bars going up and down. Okay, so what Gary and I did is we wrote a set of indicators that do the following. It colors the background. You have green generally associated with an uptrend. So if a market's going up, background is going to be solidly green. If the market's going down in a downtrending type market, your background would generally be red, like here. Bars would be red, and of course we have the notion of the mid band here. We have 4 bands below it and 4 bands above it. Featured prominently in our trading is line 2. So the bands are as follows: 1, 2, line 2, the thin, sort of skinny little red line on top of band 2, right? 3, 4, mid band, right? 5, 6, line 6, which is the thin green line at the top of band 6, right? And then we have 7, 8, so a total of 8 bands. Now these bands, of course, we have the power meters, which are the various sort of longer and shorter term, the 4 different trends on the chart. They turn green and red according to wherever you are in a trend cycle. And of course, we have predictors, which are the real-time support and resistance levels. When a market is sideways, they will go sideways. They're the kind of little bubble-looking things here, showing support and resistance. And when they're trending up, they're going to stair-step up. With the market trending down, they're going to stair-step down. It's pretty straightforward. Toggle those on and off if you want. And so the primary mode of entry for us in our trading system is what we call retracements or pullbacks. Okay? And this is one of the hardest things to master. And I'm going to go put this over here into the consistency pile in 1 second after I explain what it is. Most of you, if you've been with us a while, just bear with me. We're trying to help out some of the new folks that are coming in to visit with us. So it's pretty straightforward. In the case of an uptrend, the thrusting motion of the market is up, obviously, right? And then so a retracement or pullback in an uptrend would come back to support, like such. It is in the retracements are where we take trades. So many times if you're in the live trading room, you will hear something like, You know, if ES retraces back to around that 58 3/4 area at the midband and bounces, I would look to take a long trade there. Okay? So that's called a midband trade. And in terms of our system, that's one of our main go-to trades. So if you were going to learn any trade at all and master it, I would suggest the first one to take on would be midband trades. And I've dedicated entire webinars to how to draw those boxes. There's different tools you can use to get in. You can do something as simple as hitting a market order down here to get in. You can put a limit order here and get in. You can use our tools and draw a ray or a line to get in. And when it closes above it, it'll get long or short, depending on which direction you're going, right? But let's go back over to our consistency topic here and discuss how the trading I'm showing you now features into consistency. So in addition to picking the correct instrument, and what we mean by correct instrument is that, you know, if you're in our live room, we actively trade crude oil, which is CL, ES, which we're going to roll to the March contracts now. So you want to get rid of all those December contracts. We used to trade NQ. We don't do that anymore. It's been banned to Netherlands because of its unruly volatility. It's kind of like a child that's 2. It needs to be babysat all day long. So we chucked that out and we replaced it with the Russell, which unfortunately has taken on some of NASDAQ's characteristics. But these are all going to roll, and then YM is the mini Dow. So YM, RTY, and NASDAQ are all worth $5 per tick. So each tick of movement is worth $5. ES is worth $50 a point, and there's 4 ticks per point, so each tick is $12.50. And then gold and crude are $10 a tick, so each tick of movement is worth $10. And so what we do here is we trade intraday volatility using our indicators and our object trader tool, which is some semi-automated strategy that most of you have seen. You've seen Gary use it. We had all sorts of webinars to teach how to use it. So I'm not going to focus on that tonight. But back over here to consistency. So in addition to picking the right instrument, and so that's why I just went through those instruments, right? Crude oil, gold, ES, you know, NASDAQ, Russell, and of course YM. You can look at those too. And I'm going to put under here, and this is, in terms of importance, 1A and 1B, because they are somewhat intertwined. And I would say pick the correct, let me use a different word here, most consistent trade type. Now, what am I talking about? Okay, let's back it up. These are all bullet points of items that you will do to achieve a higher level of consistency. So what I would suggest is, and I'm just gonna make this as simple as possible. As simple as possible. Ikahula auna, that's a Hawaiian saying. Simpler is better. And what I mean by that is, if you're just starting to learn how to trade futures, I would strongly urge you to focus on ES. Don't look at anything else. Don't trade anything else. You know, it's totally up to you. Don't get me wrong. I'm not telling anybody what to do here. Okay, I'm not. But there's a reason why I'm suggesting that. Okay, because ES is very heavily institutionally traded. There's huge volume. There's like 1.5 million contracts a day. It's the most liquid futures contract on the earth. The fills are great. You don't have any slippage. 1 tick tops. There's liquidity at all levels. And the most important thing in terms of consistency, which you're striving for, is that the patterns that set up from day to day are very similar. So let's add that to our consistency bullet point here. Okay, you want to see similar patterns, and we'll call it price patterns, from day to day. Now, remember when we said a few minutes ago we banned NASDAQ to the Netherlands of outermost space? Now, if I pulled up a NASDAQ chart here, it would look nothing like this ES. See how ES is sort of nice and smooth, comes up, very orderly manner, it comes up, pulls back, holds that midband, textbook midband bounce, comes down, pulls back, kisses the midband. See, you see this from day to day to day, and we're going to look at today in detail, so don't worry, we're getting to that. But if you took an instrument where it's spiking up and it's pulling back and it's not respecting the midband, all of a sudden, you think you're long and it goes whipping 80 ticks down here, that's going to be a problem, okay? You're going to have a very, very hard time trying to get consistent trading on a spiky instrument, unless you have a lot of experience in dealing with it. So what am I talking about? Let's look at this. Here's an example of gold, for instance. Okay, here's gold. Here's gold like almost all day. What does that look like to you? This is gold all day. In fact, here is midnight, and here is the end of the day over here. What does this look like? Choppy spaghetti. Where's my meatballs? You need to take predictors off, it still looks terrible. It's just spiky. It's a whippy, spiky. Sometimes it'll just sit there for 10 minutes and not do anything and lull you to sleep, and then it'll spike either in the right direction or the other direction. It's just, for me personally, counseling a trader who's getting involved with futures for the first time, or you're coming back to futures from stocks or whatever, I think you want to avoid, another one you could look at would be crude. Sometimes crude is very methodical and behaves itself and trends very nicely. If you're going to look at any other one, I would say go ahead and take a look at crude other than ES. If ES was slow and you wanted to have an alternative, crude would be another one to look at. Yeah, crude is very tough to trade very often, Brian. So yeah, that would be in order of my suggestion for everybody who's looking to trade futures. Start with ES, learn some very simple trades on ES. Try to get consistent with ES, and then if for some reason it's slow and you want to look at something else, pull crude up. But the trading methodology itself is the same. So you're looking for similar price patterns from day to day. So you want to avoid an instrument that has very spiky, doesn't respect support levels, punches through things, and then retraces in your face. All right, and let's move on to confidence. This is things you do to get consistency. Now let's talk about confidence. How do you get confidence? And why is it important? Why are we even talking about it? What does it have to do with trading? Confidence. What does confidence have to do with trading? I mean, didn't you just say that if you're in an uptrend, the thrust is up and you pull back, and there's a mechanical way you take the trade, you box it, whatever, you get in, you manage your stops, and you take your profit. What's the confidence have to do with anything? Brian K. It has everything to do with it. It has everything to do with if you're discretionarily trading any market, it doesn't matter what it is, Forex, stocks, it doesn't matter. If you're going to be a successful trader long term, you have to first develop consistency with these steps, picking the right instrument, getting the most consistent trade type that works for you, seeing those patterns over and over, and pulling the trigger from day to day. This builds consistency. Consistency leads to building confidence. So let's talk about that. You want to build your confidence. Okay, let me ask a question to the team here. How many of you, your trading sometimes goes like this? This would be like a typical trading day, okay? So you get up, you turn on your machine, you get all the charts and everything all set up on your screens, whatever. You go make some coffee, maybe you have a little Danish or a snack or a little bit of breakfast or something, and you're ready to go. The market's ready to open. It's going to take off. You're feeling good. You're going to make a ton of money. And then you pull the trigger right out of the gate, and banga, you get slammed with a stop out right out of the gate. Show of hands. Anybody? That ever happened to anybody? Like right out of the gate, like the first trade you take, and then the self-talk comes in. Here's how the self-talk goes. I lived this way for years, so I know it as good as or better than anybody how this works. The double whammy is this, is that now, right out of the gate, you are digging yourself out of a hole. Right out of the gate. What do you think that does to your confidence? Well, it power slams it. Of course it does. What human being person? You're not a robot. You know, you got power slammed on the first trade. How do you avoid that? What do we do to avoid that? What are some things we might want to do to avoid getting power slammed right out of the gate and just crushing our confidence? And we're digging out of a hole and we start saying things to, here's our self-talk is going like this. You know what? That market knows right when I get in. Every time I take a long trade, that market pulls right against me and I get power slammed. It's ridiculous. This trading, I don't know what, it's just, I'm jinxed. I'm cursed. I'll never get it. Anybody ever say that to themselves while you're trading? I know I used to. I used to say that all the time. Right? Yep. Everybody can relate to that. If you never had a problem like that, then you aren't trading, because that's all part of trading. So here's what you do. Now, you got to develop a strategy at the open. So I'm just going to say on ES, and for most of the equities, it's 6:30 Pacific, 9:30 Central. You want to wait for at least 10 to 15 minutes. Now, that could be as little as 5 minutes if the market is trending, and we'll look at different setups here, and we'll talk about here, I'll just say 5 to 15 minutes. I'll just use that as a loose rule. Because here's what's happening. There's all sort of pent-up orders coming in. You know, algorithms are firing up. The big boys' scripts are fighting each other. They're trying to push it up. The shorties want to take it down. And it's just a jumbled mess. But if it's orderly, you can trade it. But you want to wait a few minutes and let all that mess before taking your first trade. I see several of you have typed that in here. Brian, Mario, Lewis, you say, now I wait 10 to 15 minutes before I start trading, before taking a trade. That's bullet point 1. Now, the second double whammy of getting power slammed at the open, aside from the psychological aspect of just slamming your ego, is that now you're gun shy. And maybe 10 minutes later, the perfect trade comes along, but you're gun shy to take it because you're licking your wounds from getting beat up right at the open, right? Yeah, you got to force yourself to sit on your hands. There's different ways to do it. You can when you log in, you could make sure that you are in sim, so you don't use a live account. There's different things you can do. Here's another thing that happens, is that now you get into what's called revenge trading. Anybody been through that? I'm just going to put a do not, and this is not try, do not revenge trade, which leads to, what's revenge trading? Anybody know what that is? What is revenge trading? That's some kind of weird, board game? That's when you're mad. That's when you're slamming, throwing, you got a nice cup of coffee, now slammed against the wall and coffee's everywhere. And you're slamming your hand, you're swearing, you're frustrated, you're angry. So now you're going to get back at the market. So this is going to lead to what? Over trading, right? Now you're going to start taking revenge trades to get back at the market. That's the double whammy. That's the double whammy. Your ego is slammed, and now you want to get revenge because the market hammered you again. These are all confidence crushers, right? These are all confidence crushers. So you're going to have a little bit of a delay when you take your first trade. We're going to wait, right? To build our confidence, to not get slammed right out of the gate. Let's see what I want to do here. You want to try to remain as calm as possible and try to get an even keel to your emotions. I mean, you know, it's easy to let emotions take over when you have money involved, right? You know, you see your money going up, you see your money going down, maybe it's your own account, maybe you're in a combine, and, you know, all these things are kind of going back and forth, and you want to make money, and you see it's so elusive, it's right in front of you to do it. And so you need a plan, and this is part of the overall plan to do that. Consistency leading to building your confidence to take the trades. I can't tell you these first two things how important they are. Pick the right instrument and pick the most consistent trade type and learn to see the similar price patterns from day to day. If you could do these three things from day to day, you would find that your trading will take monster leaps in the right direction. You will stop losing money and start making money. Now, last thing on the confidence before we move on, we're going to start looking at this morning's trades on ES. Okay, I want to put one more bullet point in here, and let's see what it's going to be. By the way, on the topic of over trading, I do have a small suggestion for those of you who tend to overtrade. I can tell you that, you know, a busy day for me might be in 2 hours of trading, like 3-4 trades. Okay, if you're taking more than that, I've seen people come in. How many trades does everybody take? Type in a number. What's the average trades? How many trades do you take in a typical morning? Just type in a number. You could do a range, you know, say it's like 3 to 10, or, you know, depending on the day or the volatility or whatever. 3 to 5, 6 to 8, 4 to 6, 8 to 10. Sal, wow, that's a lot of trading. Bruce says 3 to 5. 3 to 5 is a pretty good number. Now, here's what you want to do, okay? And it might sound corny. But it works. I've had a lot of traders have told me this actually works, and it's a very simple thing you can do. You get some silver dollars or some quarters or pennies, whatever coin of your choice. You put them on your trading desk next to where you're trading. And let's say that you say, okay, this morning I don't want to take more than 4 trades. 4 trades, and I want to be done. I want to be at my goal, and I'm finished, okay? So you take 4 coins, put them right next to your trading computer where you're taking those trades, and every time you take a trade, that coin goes away, and now you're down to 3, et cetera, et cetera, et cetera, all the way to 0. When all 4 coins are gone, just as an example, you're done. That's it. If you want to get control of your over trading, that's one good way to do it. You know, if you're over trading, if you're saying, well, sometimes I take 10 trades and more than half of them are losers and I'm just getting slammed. So that's one way to fix it. Okay, good. All right, so we're not going to over trade. We're going to wait some time, and we are good to go. Now I'm going to come back in a minute and add another bullet point, but I want to move on to this morning. Okay? Let's fast forward. Well, let's do this. Today was the 13th. Okay, so just to orient everybody on the charts, especially if you're just sort of coming in and looking at stuff. By the way, this is recorded. If you came in late, I see some late birds coming in. We'll send out a recording tomorrow morning after it renders tonight. So even if you're visiting or on a trial or something like that, you'll still get members, of course, will get it in the members area, but visitors will also get it. We'll send everybody a recording. Okay, so if you have to leave early, you know, dinner commitments, whatever, no problem. Now, so this vertical line is midnight Pacific time. Okay, and so most of you know, of course, that the Asian trading session goes from 5 o'clock. So it's just firing up right now. The Asian session is just kicking off, and it runs all the way until midnight Pacific, in which case the European trading session takes over from here and runs all the way into the beginning of our session on the equities. That's going to be 6:30. So you can see that in the Asian session, up to midnight, we had a little bit of an uptrend, right? Some trades over here, some retracement trades, long trades, nicely. Peaks out, gets a V-type top, pauses at the mid-band, and then now you can go into a very pronounced downtrending market. So this is one thing that is going to help with your confidence in trading also, and I'm thinking of the next bullet point here, is going to be being able to quickly And this is what I dedicated my last webinar to, quickly identify trend changes and shift your trading approach, depending on whether it's an up, down, or sideways market, right? This is really critical. I know, and show of hands, how many of you do this? You come in, you know, and you're looking at a market. Let's say you're watching this market, and it's human nature. Okay, it's human nature for people traders especially, you know, of all the people out here who do trading financial markets. When a market is in a trend and you're looking at a trend, say up here, for instance, say you were hypothetically trading the Asian session and you see an uptrend, there is a tendency to think that the market is just going to continue going up, right? Or for instance, over here, coming into the close of the session yesterday, there's a tendency when a market's going down to just think that it's going to continue going down. And so what happens as a result is when you get a double bottom or a triple bottom or a V bottom and the market reverses and starts heading up, as it did here, that might be another way you're getting slammed, is because you're not accepting the fact that the trend has changed from down to up, right? You're still trying to short it. You know, the market's done. It did a double bottom. It's done. It's going up now. You got to be looking for long trades. So what I'm saying there, and that's another big confidence issue, is being able to very quickly see and identify when there is a trend change and know that you should be taking the other direction, and don't just stick with shorting a market, for instance, because you're convinced it's just going to keep going down. Okay? All right, now we're ready to move over to the morning. Okay, so here's midnight. Here's 5:14. Here's 5:30. Here's 6. So here's 6:29. This is 1 minute before the equity markets open right here. So one of the things that really helps you, all of you, everybody, even listening on a recording, to develop consistency, you know, obviously to build your confidence, is to have some kind of routine. And what I mean routine is, I don't mean just sort of like, you know, some rote drill thing that you hate doing and you're going to do it just because you have to do it. Is, you know, even with all our indicators here, and even with the bands and the mid band and all the things we have here to help you see trades, sometimes you have to get to put other things on the charts, like lines. Gary does tons of lines in the room. You've seen lines. Most of you do lines. And what I mean by that is this, is that in the morning, for instance, when the market's getting ready to open and you're doing your pre-market preparation, what is a good thing to do at 6:28? So you're looking at a market, and your market looks like this. Okay, there's 6:29. 6:29 is right here at this line, and you're looking at the pre-market, and you're trying to decide what to do next. Let me get these words out of the way here so you can focus on the open right now. Let's tuck those in the corner. We'll come back to those later. What do you do here to prep? What would you do? Lewis says put in support and resistance lines. Good. Draw the lines. So on our list of preparatory things to get ready for the day, one of the more important things is to know where support and resistance are. So the way you do that is you quickly scan to the left and you look for places on ES where a market came down and bounced, or it came up and kissed and rolled, and those are called support and resistance levels. And I can clearly see one sitting right about here. Now, look, you don't have to spend 2 hours analyzing a chart and trying to get every perfect line in the exact right spot, because you know what? It's going to change, and it's mainly for visualization and thinking about where you're going to take trades and understanding what a market is doing, right? And then I put another one up here. You know, I mean, you can clearly see there's some resistance up here, right? Now, I'm not going to ask you to type in a level or a time. I'm going to ask a yes or no question to make sure you're still awake, because I hear thumping of heads hitting desks, dozing off. You've got to take a shot of espresso and answer this question. Simple yes or no, and I'm going to give you 5 seconds to answer it. In between here, approximately 4:04 in the morning, and over here at 6:29, is there a long trade on this chart, yes or no? Just a Y or an M. If you want to go further, you could type in where you think it is, either time-wise, here's time down here, time's down here, or level-wise. Level would be like, you know, the price. The price is over here. This is the level, and this is the time. So between here and here, is there a long trade set up on this chart, yes or no? 4 seconds. Remember how we take trades, right? What's our mode of operandi? Retracements, right. So look at the chart. 3 seconds. Is there a long trade here? Yes or no? I see some times coming in. I see levels coming in. 1 more second. I'll help you out. Excuse me. Sorry about that. Let me take a sip of tea here. Yeah, the trend is up, and so you're taking longs. That's correct, Kathy. Trend is up, so you're taking, okay, time's up. Yes. Now, in keeping with our methodology, you can clearly see that approximately 5 o'clock in the morning, this market went up and pushed out and took out some swing levels here to the upside, changing the background to green. The bars are predominantly blue. And the mid-band and all the bands are beginning to stair-step up. These are all clues and evidence to tell you that you are in an uptrend. And in uptrends, we take retracements and bounces off of support, which occurred right here. So the answer to the question was yes, there is a long trade. And if you typed in some levels, you're looking at the mid-band right around 55, 55 and a quarter. And that appears to have occurred at time-wise approximately 5:50. This is the pre-market session. So if you visualized and said that the long trade was here on a bounce off the mid-band, you were correct. That's where that long trade exactly is. Let me ask another question. How many of you, when the market opens and you see the market is heading up like this, feel compelled to jump in and put in a market order right up here because you're afraid you're going to miss the big run of the morning? How many of you feel compelled to do that? And occasionally you do, even in sim. You know, you see this heading up, you look back here, 4 o'clock in the morning, 5 o'clock, it's heading up. And what's going through your head at 6:29 is, man, this thing's going to run 100 ticks. This is going to be the run of the morning is going to come right at the open. You know what? I'm going to miss it. I'm going to be sitting here on my hands. And you pull the trigger and you get long right there. What do you think? It's going to be a big run. Right? It's going to be a big run. All right, let's play it out. Let's see what happens when the market opens. Let's look what happens when the market opens. Here we go. We're going to advance the chart. Advance the chart. Okay, here's a. So most of you said no. I never do that. Don't ever do that. And the correct answer is no. And I'm going to show you why. Yeah, Mario, I have almost every webinar. This is a very important thing. If you're going to learn how to successfully trade, you've got to get control of. It's natural human tendency. I still fight it 20 years later myself. Look, I see a market going up, but here's how you do it. You go back and you look here and you look back to the left and you see that this trade that is long here actually set up back here and you missed it. So when you miss a trade, we have a saying. We have a saying, right? Our saying is, don't chase it. You have to wait. Patience is so critical to your success. You have to develop some patience. And it's hard because you see markets going up and down and you feel like you're missing something. Okay? All right, let's advance it. Let's see what the market actually did. Okay? Here we go. Okay, so initially it pulls against you. You're upside down. You're feeling a little panicky. Then it moves in your favor a few ticks. You're feeling better. You know, you're thinking this thing's going to go all the way. And sure enough, look, it comes right down there. And guess where your initial stops were sitting from here, where you got long? Yep. Somewhere down in here. And look at that bar. That bar just nicks your stops, and you get taken out for a loss right at the open. Remember we talked about that? Now, question for the team. Let me blow this up so you can get a really good idea of what I'm talking about here. What is happening right here? Is this anything warranting a call to action? Let's forget about this trader. He stopped out. He or she did the wrong thing. Got in at the top, the peak, went up a little bit, and then came back and got a full stop out. So we'll forget. We know not to do this, right? And here we got some yellow bars, and where are they located? Yeah, right on the midband. So let me ask this question: in our approach to entering, would not this have been another thrust? And then what is this? Yeah, it's the retracement. It's a mid-band long trade setting up. Right? Isn't this a mid-band long trade? Isn't it coming right to the mid-band? Here, let's advance the bars. Let's do a couple bars together. Here, I'll help you see this a little bit better. There you go. Comes down, kisses the mid-band, sits right on it, and bounces right off of it. Here, let's do it again. Comes all the way to 65 1/4, peaks out, pulls back, hits the mid-band at 59 1/4, bounce, and heads right back up. Right? Heads right back up. That's a long trade. That's a long entry right here. So here's my advice. And that's right on the cusp of our rules. We said 5 to 15 minutes. This actually set up right at 6:34, 6:35. So that's why, obviously, it was another reason you want to avoid taking trades right at 6:29, 6:30 when the market opens, because it's prone to doing something like that. You know, realistically, if you were to type in the odds, what are the odds of you missing the big run first thing in the morning right at the open? What are the odds of that happening? Just think about it intellectually for a second. That the huge run of the entire day is going to be right at 6:30. And what are the odds that you're going to miss it? So that's kind of a two-part question. Very unlikely. Not likely. That's right. Very slim. I mean, look, there's been occasion. In all the years I've watched this, there is an occasion. It's extremely rare where at 6:30 the market takes off like a rocket, hardly pulls back, and then chops around the rest of the morning. It does happen, but it's extremely rare. And normally, if the market's going to run, it will give you, some kind of retracement to enter. Now, when we're talking about trade types, you're going to hear a lot of trade types in the live trading room, and the reason we do that is because we have traders all over the world, literally. I could show you a world map, and we literally have traders all over the world who are trading different markets. Some of them are trading overnight, currency futures, using our methodology. They're trading different things. Okay, so we have to show all the different trade types it's set up. We have what's called a minimum criteria trade. Now, in a long market where you're heading up, the minimum criteria is you got to close below stealth and line 6 for a long. Okay, so if a market came into here and it bounced, that's a legit entry. Yes? The next one is the midband. We know that. That's more or less at or on or around the midband. Like such. So I'm going to go a little deeper. And then in the case of the short, where you got a short and you're retracing, you've got to come, the minimum criteria on a short side is you got to close above stealth and line 2. Okay, everybody see that? Now, so those are 3 trade types: minimum, deep retracement, midband. What I'm going to suggest to you is just focus on that for now. Now, look, sometimes it's going to retrace deeply and you're going to miss it. Sometimes it's going to retrace very shallowly and you're going to miss it if you just focus on midbands. However, Stealth is this little sneaky snake line here, Chris. You see the green when the market goes up. You see how there's like a green, like snaky looking line. That's called stealth. We've had that on charts forever. We use it a lot for trail stops. So like if you're in the room, you might hear something like, okay, use stealth in line 6 for your trail stops, or go fade under 3 ticks under stealth in line 6 for your trails on your long, right? Or line 2, it'll be a red stealth, right? Go 4 ticks above the red stealth in line 2 for your short trail stops. Okay? Yeah, that's what that is. So here's what I'm suggesting. Let me pull it all together. And then we're going to look at the rest of the trades here and get ready to wrap. We want you to start off to learn how to trade ES because of the consistency of the price patterns. Okay? And like I said, if you're going to look at another one, you can look at crude. Sometimes if it's moving very smoothly, you can take some crude trades. I would hold off, even if you're a beginner to any intermediate level, on looking at gold, NASDAQ, Russell, or YM. I would just hold off on those. So the two you want to look at are here. I would not have more than 2 charts on your screens. If you can afford some large screens, it makes sense to have at least 2 of them. If you can go 3 or 4, it's even better. And you should get, big screens are cheap now. I mean, I think you can get a huge, like 30-inch screen for what, like $180 or something like that? So spend the money on the screens. Now let's talk about how this trade played out here on the long bounce from the mid-band. You get filled long on, depending on how you drew your box or where you took the trade, either on the close of this bar or the close of this bar, you are filled long. Okay? And we head up, we head up, we head up, we get a fresh swing high. Okay, can you see this? Excuse me. Hold on a second. These all tickles in my throat sometimes. So here's what I was talking about. Can you see the stealth line following the price up? And can you see line 6 following the price up? So there's different methodology on how you can use your trail stops. We teach that in another webinar. But basically, you know, if you kept the tight stops, you would be out here, somewhere here. This would take you out right in here somewhere. So let's do some quick math. If you got filled at 61, let's just use some round numbers so we don't have to bring the calculator out here and figure this all out. And you got out at 66. 61 fill long right there, and you stopped out at 66. How much money did you make on that trade? Well, let's do some quick math here. 61 to 66, 5 points. And how much do we say ES was worth per point? When we first started the webinar, what do we say ES was worth per point? You got 5 points, right? 5 times 50 is 250 per contract. Excuse me. If you put 2 lot on here, if you put 2 contracts on this trade from here to here, and you got filled about where I'm showing, this would be less commission too, right? You have to take commission out of there, which is only like $3.50 or $4 or $5. It's not much. So 1 contract on here would be $250, and 2 contracts, we call that 2 lot. This would be a $500 trade. And we're done by 6:40. It's all in the first 10 minutes of the market. Now, if you made $500 on an ES trade right out of the gate, how many of you would be done? Show of hands. Just put this right on the chart here. So 250, 1 lot, 500, 2 lot. A lot of you are saying me. 10 lot and done. Well, 10 lot bites both ways. It'll gobble up 10 lot like it's not even there. Give me some more. Yeah, so you don't have to worry about that. But you know, if you get stopped out on a 10 lot, you're going to be hurting. Especially if you're in a combine where they limit your daily loss, you can get hammered. 12 tick stop on a 10 lot would be how much? 12 is 350, $1,500 on a 10 lot stop out on 12 ticks. You would lose in one pop $1,500, and that would stop you out of a lot of combines. 1 lot would, depending on your size of evaluation account would, could blow you out. All right, let's move on and look at what happened in the rest of the morning and talk about, and I'm going to do it in this manner. I'm going to advance the chart as though we were reconstructing the morning together, and we're watching it in real time, and you tell me when you think you see a trade. Let's do this exercise. I've got about 6 minutes left. I want to do at least 2 or 3 or 4 more trades. Okay? Okay, here we go. Ready? So you don't have to say if it's long or short. You don't have to say anything about when you think you see a trade, you just type in a T. I love doing this exercise. I get a lot of good feedback on this. People say this really helps them visualize trades. So let's do a few together. Ready? Okay, here we go. Okay, this trade's done and gone. We're at 6:41, and we're going to watch the charts all together. Here we go. Okay, I'm going to blow it up. Now you're 6:47 a.m. Pacific time. $6:49, $6:50. We're 20 minutes into the trading session on ES. All right, I'm going to stop it right there. You missed it? Okay, a lot of you typed in T's. Okay, now I'm going to show you a couple of things here. This is really important as you're learning our system. Okay, if we're saying for you to get consistency and build confidence, that you need to pick the right instrument. So the instrument's solved. We're going to trade ES, right? That part's done. And then we said you're going to limit your trade types in your early stages of learning this to mid-band trades only. So if we say mid-band trades only, then that means, here's what that means. Explicitly, this is what this means, is that you are not interested in a trade until it enters this zone right here. Market can dink around up here, can dial around down there, can go over here, run up over there, and all manner of places, and whatever. Until it enters this zone, you don't care. Because in this plan, when ES comes into this sweet spot right here, now you perk up and start looking for trades. Okay? Most of you typed in a T when these bars formed right here. And that was correct. You could have, as I recall in the room, I think at the time this area formed, we said put a box on it and let it go either way. Now, was there other boxes? Yes. Now, was this ever filled? Long? No. Some of you might type in T when that formed, and that would be a minimum criteria trade right there. Some of you typed in T's when you saw this. If you had the long side enabled, so in other words, when those areas formed, the background was still green, and you may have believed that it was going to continue up, so you enabled long only on your region box from Object Trader, but you were never filled. It never closed above the box and just continued to drop lower. You kiss line 2, it bounces up to the midband, kisses off of line 2, and then rolls over and sets up a beautiful short trade. Mario's saying, dang, Charles. That's a saying we like to say, by the way. This is one of the best and timely webinars. I've been really trying to get a game plan together for myself for 2019 and didn't know where to start. Last couple of webinars from last Thursday and this one are now giving me the material I need to get all set for 2019. Good. That's why we do them. I'll tell you what, if you just learn to take mid-band trades on ES in the morning, you will knock it out of the park and make a ton of dough. I mean, even if you take 1 or 2 of them. You don't have to take them all. Let's look at okay, let's continue on until when we close the room. We close the room at 8. There are more trades here. Let's do them together real quick. Okay, there was that short. Okay, I'm going to advance the chart again, reconstructing this morning on ES. And when you think you see another trade, you're going to type in a T. Here again, you don't have to type in a level. You don't have to say long or short. You don't have to put a time. Just when you think you see a trade, type in a T. Here we go. Okay, we're at 6:48 a.m. Pacific. There's the short. So down we go. Taking out that support level. 6:55 coming up on 7 a.m. Pacific. $6.57. Excuse me. That tickles back. Remember, you're typing in a T when you think you see a trade, right? Okay, now you're at 7:03. $7.04. $7.05. All right, I'm going to stop it right there. Some of you typed in T's when these bars formed right here, and that was correct. When these bars were forming right here. And this is what we call minimum criteria trade. When you close above line 2 on a short and above the stealth line. Now, for those of you who are learning to trade midband only, we are saying just for now, not forever come to pass that you'll never have that trade type in your little quiver bag of trading tools. You know, we're going to continue to teach that, and a lot of people are going to take it. That turned out to be a little scalp trade on a double bottom, right? See it? In fact, we were calling this out in the room, remember? We said if you stopped out here with the tight stops, you could always get back in and catch the scalp, and then it turned out to be a double bottom. We called out the double bottom, and then some of you typed in T's when this formed right here. And a few scraggly T's came in here, which is the tail end of acceptability for, because these bars are right at the cusp of band 5 trying to break up. If you take something like that, we have a saying, don't let it come against you. So if you get filled long, say on the close of this bar right here, and this had a great follow through. It's turned out to be a fantastic, beautiful long trade. This one worked out. But an occasion when you're just going to go to the bottom of your box right around the midband and put your stops, just drag your stops right to there. So for some unforeseen reason, the market flips on you and you're long, you want to get out of that quick and then look to re-enter. You everybody see that? Yeah. So this was technically meets the minimum criteria for short entry. So that if you typed in T here, that was correct. If you said that you would have boxed it here to take a trade and perhaps let it go either way, I would say correct. If you typed in a T here and let it go either way, you were filled long on that bar right there. So let's see what this trade did. So this trade went from there to here where it stopped out, somewhere in that area. And so the trade more or less looked like this. And let's see how much that was worth. You got filled long at 61 again. Trail your stop, trail your stop, trail your stop, and you got out this time at 68. So that is 7 points. 7 times 50 is 350 a contract, yes? And 2 lot would be 7 bones. $700, right? It's on a 1 lot. 7 bones on a 2 lot. Now how many of you would be done? $700 on a 2 lot? John says I'm out. I'm done. One and done. So you can see here what we're trying to illustrate in this exercise is that training your eye. So technically by this point in the morning, you've had 3 trades, right? You had the long here at 6:33, 6:34, 6:35, the first trade of the morning, lasted about 10 minutes. You had the short here, which could have been punctuated into 2 separate trades. Short here and the scalpy at the end. And then you had the secondary long here, which ran up 7 points or 28 ticks. Less commission, of course. Yeah, we're not looking at those, David. I see some questions coming in on those. We're not looking at those, right? And what we're teaching here, what are we doing? We're trading ES and we're trading mid bands. Now that's not to say that there's all kinds of other trades, minimum retracement trades, phantom trades, deep retracement trades. There's all kinds of trades. We talked about that, right? But if you want to get really consistent and just really nail it until you just, you got a huge win rate of 75, 80%. That's what you want to do. And you want your winners to be, 20, 25, 30 plus ticks, 60 ticks, and your losers to be like 10, 12 ticks. Okay? All right, let's do one more and then we're going to wrap. Tell me when you're ready. Yeah, no, you're right. I mean, with this approach, if you're not taking the minimum criteria in the deep ones, if you're not taking those, you are going to miss some trades. Yes, it's going to happen. But the trade-off is that you're going to go for a higher consistency rate, and you're going to have more confidence to take the mid-band trades once you've mastered that trade type. Yes? I think everybody would agree with that, right? All right, let's do one more exercise, and then we're going to wrap. We're going a little bit over, but that's okay. Stick around. Let's do one more together. Okay, so here we are at 7:13, 7:15, 7:22, and we're going to do an exercise again where we're going to type in a T. I'm going to advance the chart for another half an hour, reconstructing this morning, and when you think you see a trade setup, you type in the letter T. Here we go. Last exercise. Okay, here now we're at 7:27. Blow it up a little bit so you can see it real good. Okay, let me do that again. Okay, here's 7:16. 7:20, right? 7:16, 7:20. Okay. 7:21, 7:22, 7:24. 7:31, 7:35. Get this line out of the way. Take this one out too. It's not relevant anymore. Okay, 7:38, 7:40, 7:41, 42, 45. Here we're doing 7:30 to 8 o'clock here, right? You see trades, you type in the T, right? We're doing this together. We're reconstructing ES from this morning, as if we're watching live data together. Now, obviously, I'm going like 100 times. This from 7:16 to here was an actual half an hour, and I just showed all of it in a minute and a half. So you're looking at 1,000 times speed, but it's still good to help you visualize this, right? Okay, 7:48, 7:50, 7:51. We're coming up on 8 o'clock. All right, we're done. Brian K. ES handed you money today. I think you were, we were taking all these mid-band trades. You were taking the shorts here with us. So let's quickly recap what you have here. Some of you typed in a T as early as right here, and that is correct. That is a mid-band box. It was never filled long. And I don't think at this point you would have enabled shorts. So I don't think you caught any kind of short here. Now, many, many of you typed in T's when you saw these bars form right here, and that is correct. I would say that this was a trade opportunity that never filled. Okay, so we're not going to really count that one. This one here, at the time that you have this neutral background, sometimes as a trend changing occur, you could have let this region box go either way. So if it was filled long, you would be long up to here, and as you can see, it went the other way. It filled short on that bar right there, short. Now, of course, everybody sees the thrust. Now, look, these are normally the ones you see here and the one we showed on the long over here. if you learn to be an early adopter and quickly see when trends could be changing, you will be able to catch the first legs of these initial moves. Okay, this is a skill set you got to work on. Okay, so that trade went from there to there, and you were correct. If you typed in a T, that is correct. That was the first short right there. Many of you typed in T's when you saw this retracement up to the midband right here, and you were correct. This was a short trade, textbook midband kiss and roll, textbook. That trade went from there to here, stopped out. You came just shy of the midband. However, we were in the sweet spot zone to take the trade. We said it's the band above and the band below to take the short. Midband, yes? And many of you typed in T's when these bars formed right here, and you were correct. 1, 2, 3 short entries. And that trade would have stopped out right here. Now let's just do some rough math. From the first box to the final stop out was a total of, let's find a round number here, 64-ish. And you got out at, I don't know, call it 48, 49. So what was that? 49 to 64. 64 to 49 is 15 points. 15 points times 50 is how much? So one lot on your short here, it could have been punctuated into 3 separate trades. We were calling this in the room, and I actually took this trade with 4 lot. So I made decent money on this rundown here. And we're saying one lot on a 15 tick or point move is 750, right? On the one lot trade. And you're looking at, 1,500 on the 2 lot trade. And there you have it. You could have missed all these other trades here. And I even looked at chart till 7. Didn't take that one. Missed the short. Didn't get the long. You were cooking up a Spanish omelet. Got done with your Denver omelet, and you had a pastry. 7 o'clock, you're looking at the chart. You see this setup right here. Maybe you missed the first leg. Maybe you get it. Overall, it fell 15. Well, it was 60 ticks. 60 ticks overall drop. You missed this first leg, no problem. You see the bounce to the midband. You see the kiss and roll. You take it. You hear the call in the live room to take it, right? Comes up, kisses right here again, get another chance to get in, and the final leg of this trade was here. Let's see what the final leg was. Let's say you missed the first 2 legs, and you catch this final leg right here. You got short at 58. Let's use a round number. You got out 48-ish. 10 times 4, 40 ticks. Just this last leg alone is worth how much? 5 on one contract. What's 10 points? 10 points on each is $500. Yeah, Cross, you can do that. Yeah. So what I'm suggesting here is when you first start learning how to do this, try to pick a consistent instrument like ES to learn on. And even though it's $12.50 a tick, $50 a point. If you get upside down, in the beginning, you're not going to trade a lot of size, okay? You're not putting 4 lot on here. You're not putting 10 lot. You're going to do with 1, maybe 2. Don't do any more than that because if you take a loss, you're going to get popped at $12.50 a tick, right? The main thing you're trying to do is just learn the methodology of getting in at the midband. If you can master that on ES, you will make money. I'm not going to say I guarantee. I don't ever want to guarantee anybody, come back because I don't know what you're doing over there, what buttons you're pressing or where you're getting in. All I can do is teach you and show you where it is. And then you have to carry the ball from there, right? Because you're trading your own chart on your own screen, and it's your decisions. The best I can do is tell you where I'm getting in and tell you where I see the trade setting up to help you see it. But the whole idea here, you've heard me say this a million times. Our whole idea of our program is to teach everybody to be independent and see the trades themselves. And when you hear a call in the room, it reinforces what you've already seen for yourself. That's what we're saying. No, Kathy, I don't know that we can do that. We've got too many people involved to start opening separate rooms. We tried that for a while. I don't know if you remember, we had an early morning room where I think we looked at Forex for a while. We had a late night room where we looked at currency futures. We've tried different variations of that. We got so many people coming in. And so here's the thing. Here's the last thing. I know what you're saying and where you're going with that. If you're trading and focusing on ES, and you're in the live room and you hear a call out trade called on the Russell, should you pay attention to it? Yes or no? You're trading ES, you're in the live room, and you hear a gold call. I'm going to short that gold up there, 1242 at the mid-band. It rolls over, I'm going to short gold. And you're trading ES. Do you care about the gold trade call? No. So this is a critically important thing. I'm going to close on this. There's a skill set that's really going to help you make money consistently with this, and it is what's called selective listening. What you have to do is learn to filter out the calls that are not related to the instrument you are trading. So if you're exclusively trading ES, and there's a call in any other instrument, crude oil, gold, doesn't matter, in the end, you don't care about that because it has almost literally no effect on you at all. That's right, Brian. I'm just keeping it as simple as possible for everybody that's new, coming to join us and what have you. If you just only took mid-band trades on ES and manage them properly like we show right here, you will make good money. Arnie says, my wife says I have that selective listening problem. Well, it depends on where you want to use that. That might be the right setting for your wife. Selective listening, just zone out the rest of whatever she's saying there. It could get you in a little trouble there, Arnie. So, okay, let me stop the recorder.